Welcome to the Real Estate Investing Morning Show with your hosts, Wayne and Gabby.
Hey, good morning.
Hey, good morning, real estate investors, and welcome to the Canadian Real Estate Investing Morning Show. So, lots of things can go wrong with real estate investing, and there's no shortage of that. And that's why it's so very, very important to make sure that you have backup plans whenever you are doing any deals. And so for today, what I'm going to do is I'm going to share a real life backup plan, or a plan B, that we had with one of our real estate deals that ended up succeeding. So that's what we're going to be getting into today. We're going to be talking about a rent-to-own deal that we had that didn't play out the way that we wanted it to, but we had a backup plan.
Mm-hmm. These situations can be very stressful, and this is where I'm so happy that you come in, Wayne. You always have a million different backup plans, but for a person like me, it's you can enter into panic mode, right? Like, oh my God, this failed. What am I going to do? Am I going to lose it all? All of a sudden you start doomsdaying it. And so when you have these backup plans from the beginning and you know what you will do if X, Y, or Z happens, it can be really seamless, and it can still turn into a very profitable venture. Mm-hmm. Yeah, regardless of whether plan A works or if you need to pivot.
Yeah, if you're going into business or real estate investing just assuming that everything is going to go as planned, I mean, that's very naive thinking. Yeah. And I try not to be pessimistic. I try not to just assume that everything is going to go wrong. But if you play that game of, imagine this didn't work, or imagine this didn't work, or imagine this person said this at this point, but you've got a solution to every one of those, variables or different outcomes in the multiverse, you never have to worry about being surprised. You never have to worry about losing any money. And that is it. I am the watcher. I know every possible outcome that can happen in the multiverse with our portfolio, with our business. And so that when things do happen, I'm never surprised. I just react. I react, but I've already played this through in my head before, if not 100 times. And as you scale your portfolio and as you run your business, what's going to happen is you're actually going to see the same outcomes happening multiple times too, or similar outcomes. And the more times you deal with them, the more comfortable you are the next time it pops up. Mm-hmm. Yeah. Right. And that could be tenant related. You know what I mean?
Yeah. I was about to say that could apply to so many things in real estate investing.
For example, I'm gonna try and provide as many examples as possible today for context and to provide you better perspective, so that you can start establishing your own backup plans and plan Bs and plan Cs. But for example, when the first rainfall happened in early June, and I have done my absolute fucking best to not talk about the rain on this podcast because it still stings like a motherfucker, and it is still raining here in Edmonton. We are 7 weeks in now, and it is still raining. And it seems like every other day or every weekend, we've got another underpass, flooded and people stranded, or basements flooded and things like that. So I'll talk about it when the rain stops. I'm holding out. I'm kind of, anyways. But when the first rainfall happened, we had to deal with the situation, and I don't know if it was a first for us. We've dealt with sewer backups before, but have we ever dealt with tenants having water coming in through the walls or from window wells? I don't think so. But when we did deal with it, I already kind of knew how to handle it. I already kind of knew, who's responsible for what insurance policy covers what does the tenant's insurance policy supposed to cover? What are we responsible for as landlords as per the Residential Tenancies Act? What are we responsible for as landlords as per the Alberta Minimum Housing and Health Standards? I understand all of it, so I kind of knew how to react to it. But, it was the first time we ever dealt with it. And then shortly after, so that tenant was, we had to deal with that situation. But then shortly afterwards, another tenant had the exact same issue because more rain. But because we've already done that before, and because we've already dealt with it, we kind of already put plans in place. And Gabby had already created templates and a flow chart. Oh, flow chart, that's a bad joke. And so she was able to handle the situation comfortably. And then since then, we've had to handle it even more times. So it's thankfully, having
repetition.
Through repetition, you kind of just get used to it. What a terrible example of things to talk about, actually. I told myself when right before the show was starting, we were talking about what we're going to talk about today, about having backup plans and on this deal. I'm like, we should probably find something else to talk about beforehand. And instantly, we automatically went to like floods, and we're like, nope, we're not talking about it. We're not talking about it. Not yet. So here we are talking about it. Right. Now, I have also got something else. Before I move on with this discussion and try and find some sort of a segue into some other example, I find it awfully curious. I find it awfully ironic that our daughter, the weather girl, who you haven't seen in 7 weeks, decided to stop doing the weather right before all this rain started happening. And I'd like to know, why is it that you leave and then suddenly we deal with more rain than we've ever experienced ever in the history in over 100 years? So explain yourself.
We're happy to have you back. Go ahead.
The weather today will be 23 degrees in Edmonton, 26 degrees in Vancouver, 26 degrees in Winnipeg, 25 degrees in Hamilton, and 23 degrees in Halifax.
I'm not blaming you, but you failed to mention that there's thunder showers tonight in the middle of your soccer practice.
Yeah.
It's crazy.
Yeah.
It's absolutely
can't
crazy.
Can't
catch a break. We've there's a few properties we've just given up on. Not given up on, like we haven't torched it yet. Even if we wanted to torch the property and collect the insurance money, it would probably rain and put the fire out.
That's funny.
Jesus.
I like it.
You like that one?
Yeah.
The basement suites are sitting vacant.
Yeah.
Because there's no point in, of course, we're cleaning up any messes and we got air movers in there, but like there's no point in repairing it or putting new tenants in until this rain stops, and it just does not seem to want to stop. It's crazy. But I know that it's not just us. And at first it felt like it was just us.
Yeah.
It felt like it was like, why is this happening to us? But like there's so many other landlords that are dealing with the exact same situation.
Yeah.
And then there's so many families.
Yeah. Well, you can tell, like it's been interesting watching like how everything goes on, because our first one, I think that we definitely were one of the first, because we actually had, our first two, because we actually had people come out same day or like first thing the next morning. Whereas now if you're calling people to try to get some help, you're seeing longer wait times. And, if you're waiting for estimates to come in, they're taking weeks, not like days.
Yeah.
So yeah, it's been unfortunate. I think that definitely is something that we can maybe think about talking about, because I think a lot of people are confused about how to handle these situations, or maybe not necessarily confused, but for them it is a first, and they aren't as familiar, have as much experience navigating the Residential Tenancies Act and the health and housing standards and those types of things. So I think that maybe there is some value, that some real life, real relevant value that we could bring to try to help people who are in similar situations. I know that there's people in our mentorship program that are going through it as well, and we're helping them through it. So it's one of those things where it's like, you don't want to talk about it. You don't want to bring, it's like this negative cloud literally hanging over us right now. And we try not to bring too much negativity to the show. We want to talk about positive things. We want to talk about doing this thing and bringing confidence and giving you guys the resources you need to actually move forward and to build something great. And to sit here and talk about all the bad things that, can happen, this isn't one of those situations that should be ruining anybody.
Yeah.
And so, we want to.
Some people are being ruined, but I want to point out that a lot of the systems that we teach and a lot of the rules that we teach about real estate investing, I would say that the last 7 weeks in Edmonton, with the amount of rain that we've had, I don't even know what the count is at yet, or what we're currently at for how many millimeters of rain we've had. We broke the record like 3 weeks ago.
Yeah.
But we plan for this. We don't plan for this specifically, but we plan for this in the systems that we put in place. And we talk about, I talk about in my book, the 5% rule. I don't know if it's around here. Is it? Andy? We talk about this in the 5% rule because the 5% rule protects you from storms. Again, no pun intended. This is some sick joke that the world is playing on me right now. It's like, oh, I'm talking about storms, huh? Here's a storm. Because you never know when you set sail and you start your business or you start your real estate portfolio, you never know what's going to come. You never know what's going to come and hit you. And sometimes storms can just kind of come in and you can't see them coming. But when you set sail at sea, you need to make sure that you're planning for the worst. You need to make sure that you're planning for anything that could possibly happen. And that's what this book is about. It's about making sure that you have proper reserves and proper cash flow to make sure that you can weather any storm that comes through. And I'd say all the storms that we've dealt with ever since 2020, I swear to God, this has been the worst run. The last 6 years has been the worst run. It seems like anything that can possibly happen that you could, has happened. And things that we could have never imagined have happened. And I did not have it on my bingo card that we would get 7 weeks of rain straight.
Yeah.
You know what I mean?
Yeah.
Everybody was making jokes about, building an ark in the first week. At this point, it's not even funny anymore. It's just like, Jesus, give me a break. Seriously. So anyone who doesn't have proper cash flow and anyone who isn't putting that cash flow into their reserve fund, they're hurting right now.
Yeah.
They're quickly learning about deductibles with insurance companies. They're quickly learning that in situations, disasters like this, insurance companies are not very quick to act if you are going through insurance. Mm-hmm. And if you're not going through insurance because your deductibles are too high or you don't have flood insurance or you don't want it to affect your policy, then you're quickly learning how incredibly expensive something like this can be. And we're creeping up on, we're probably creeping up on $100,000 total in our portfolio of remediation. By the time it's all done, it will be probably over $100,000 in our portfolio. Now, for a lot of people, that'd be like, Jesus Christ, that's terrible. Do understand that we at scale, this is a very large portfolio. But also, I'm not bothered by it because we plan for things like this. I've already assumed the worst. I've already walked into this assuming that every possible bad thing that can happen. And by doing that, I just made sure that we always put the cash into the reserve to cover crazy scenarios like this, right? Yeah. Anything that possibly happen. So yeah, if we got a property that requires $10,000 worth of remediation, that sucks.
Yeah. That's
going to take a big chunk out of our reserve fund, but we got the money. We can pay for it. It's there. It's there. You know what I mean? And it is what it is. What are you going to do about it? And so some people might say, I don't want to buy real estate because we're going to get another crazy flood like that again. Yeah, maybe once in 100 years. You know what I mean?
Yeah.
And if $10,000 is going to ruin your deal over a 15 to 20 year deal, then yeah, you probably shouldn't do it.
Yeah.
Right? But we buy profitable properties that have strong cash flow, right? That meet the 5% rule. Okay? Because we're always making sure that as long as you meet the 5% rule, you can pretty much handle any possible disaster that can come up. And then we put all that cash flow into the reserve. And it's there for circumstances like this, for situations like this.
Yeah. And it's also very interesting. We were chatting with one of our contractors. Was it last week? Yeah, late last week. And he has a lot of clients that are dealing with floods, and he's kind of on wait. Like they're waiting for the insurance company, or they're waiting for this quote, or they're waiting for this and that, and waiting for all the things. And he was telling me about all of the like clients who are like panicking, like how are they going to deal with this? What are they going to do? And we had that exact conversation with him about, you're going to see the difference between investors who are doing this the right way with really good foundation. No, sorry, another bad joke. But a really good foundation built under them on their real estate investing business, and investing with fundamentals and with all these rules in place that mitigate virtually all of your risk. Yeah. And he said, you guys are he said, I've never looked at it from the lens that you guys are shining right now. And it's certainly not what I see when I'm talking to people. So you are literally the only one doing investing the way that you say that you're investing, because everybody else is like, what are we going to do? Oh my God, like panicking, right? And about losing everything, and about how they're going to afford this, and about just so it's kind of eye-opening.
The amount of tenants that we have applying for our vacant properties right now that are saying that they need a place right now because there's mold in their home because of the rain and things like that, and the landlord's doing absolutely nothing about it. Like it's absolutely crazy. So what we want to do is we want to teach you how to again build strong ships to protect you from storms like this. Again, sorry for the no pun intended, but when crazy things happen, you need to have a backup plan, or you need to put systems in place in order to provide you that backup plan. And sometimes the backup plan is just having cash on hand or money in your reserve fund in order to cover things like this, right? So let's make a transition here. Let's make a little segue into what we're going to be talking about today, and that is a deal that didn't go as planned. This one did not involve any water, thank goodness. This was one of our many rent-to-own deals that we've done. And what happened was the tenant buyer decided that they didn't want to continue anymore. And in a lot of cases, this might be the type of deal, or this might be the type of situation that would really cause a lot of stress and anxiety for some real estate investors. But for us, again, it was just another day of business. And we already knew how to handle a situation like this, or more specifically, how to handle an email like this, where an email comes in. You know what I mean? And the ultimate route that we ended up taking wasn't just the automatic route that we automatically, that was our snap response. Like, we'll just do this. There was about 5 or 6 other possible options before we landed on this. But again, when you have backup plans, or when you know what to do, you see the flow chart and you can be like, okay, this happened. What do I do? This happened. What do I do? This happened. And you know what I mean? And if you have that flow chart and you know exactly what to do in these situations and how to respond to it or how to react to it, it's very easy. And in this way, it's just a matter of just like, yes, no, yes, no, yes, no, through the flow chart to figure out which route makes the most sense for you to get you the most profit and the least amount of risk. So when we come back from the break, we're going to talk about this rent-to-own deal that didn't go as planned, and how we ultimately succeeded in it by increasing our profits and increasing our cash flow. We'll be right back.
Real estate investors need to treat debt differently than homeowners, and at Kirkland & Brennan Mortgage Group, we understand that. For the last 11 years, we've helped real estate investors plan and build their portfolios. We understand how to help you avoid fees, penalties, getting yourself stuck, and making sure that the deal you're doing today doesn't stop the deal you want to do tomorrow. You can reach out to Keaton, Keaton, at kbmortgages.ca. Put plan on the subject line, and we'll help you build a plan and then realize it for your real estate goals. We also coordinate with the other professionals like your accountant, lawyer, realtor, and we will help you build your portfolio. So reach out. We'll do our best to help. Thanks, guys.
You've got showings, lease signings, suite renos, condo board meetings, credit checks, mortgage financing, and every so often the tenant clogs the sink because they shove macaroni down there. Stop. Breathe. Leave the bookkeeping to Fingo. Fingo is specialized real estate bookkeeping by real estate investors with tailored services for maximum returns. Save time. Enhance your returns. Claim the plumbing repair for that ridiculous macaroni fiasco. Book your free consultation at fingo.com.
Summer. While everyone's getting distracted, this is when the market gets quiet. Not because the opportunities disappear, but because the people do. Vacations, long weekends, these are the distractions I'm talking about. And that's exactly when serious investors make their moves. At Calvin Realty, this is one of our favorite windows. Less competition, more flexibility, and sellers who are actually open to negotiating. While everyone else is stepping away, we're stepping in. If you're looking to buy right, not just buy fast, this is your edge. Calvin Realty. Opportunity doesn't take time off.
And we are back. I see everybody is very active in the chat today on YouTube. We're broadcasting live as we do every weekday morning at 7 a.m. Mountain Time on YouTube. You can join us as well by looking up the Canadian Real Estate Investing Morning Show or Wayne Hillier, Real Estate Investing Coach. Big good morning to, I see Chris is here.
Yeah, Chris is here.
I have a hard time reading it.
Yeah, Chris said, morning, all you happy people. Hope everyone is having a wicked awesome summer. Our family sure is. Oh, that's great. I hope that the smoke isn't too bad where you are, Chris.
Yeah,
Although
what a
I'm
complete
sure
opposite on the other side of the country.
Yeah, no kidding. Francis is here, says good morning. Manny's here, good morning. Kyla's here. Nice to have you back, Kyla. Kyla says, we left BC to get away from the rain and it followed us. Ain't that the truth? Yes. Hopefully your guys' portfolio is faring down in Red Deer area. Faring well, I should say. Good morning to Mayatoma. Good morning. Stuart's here. Stuart says, my golf game didn't go as planned on Friday. Too many unplanned Caesars. Good to know.
What was the backup plan on that one?
Yeah, what was the backup plan? What was the original plan? How did it go off course? That was a plan that was intended. And nice. what were the backup plans?
Yes. On the topic of backup plans, I just want to share really quickly. One of the greatest backup plans I think that we've ever come up with in recent years is if you have a property that's not performing all that well. Perhaps you've got a property that maybe the cash flow was when it got started, but maybe we're in a bit of a down cycle now in your market. And specifically in Edmonton, for example, where a majority of our portfolio is, we've been experiencing a down rental market. Real estate market's holding strong and doing well in some areas and mediocre in other areas. But the rental market is definitely, taken a hit because of all of the new inventory that's been added over the last 3 years. And because of that, a lot of investors who were hoping that the rental market was just going to keep going like this forever, quickly learned that it doesn't work like that when you keep building more and more and more. But there's certain types of rental properties that are doing really bad, and then other rental properties are absolutely thriving right now. Mm-hmm. And so for single family houses, I found that single family houses are holding on. They're doing really well right now. Yeah. But I mean, single family houses have been they're like collateral damage, even though single family houses are very unique and they are not directly affected by what's going on in the rental market right now. There's still a lot more inventory out there. So maybe the rents have gone down a little bit. And they have in some circumstances in some areas. Maybe you didn't plan for it properly. Maybe you're in a negative cash flow situation. Or maybe, I'm just throwing out a bunch of maybes. Maybe you bought a property and just assumed that real estate was all about value goes up and that's the only way to profit from this. Maybe you hadn't found the Canadian Real Estate Investing Morning Show yet. Okay. That doesn't necessarily mean that you just have to sell your property and start over. Because one of the greatest backup plans that we've ever created is adding garden suites, multi-unit garden suites specifically. Yeah. And we're holding a workshop this Saturday, July 25th from 2 to 5 p.m. where we're teaching you how to add multi-unit garden suites, how to get the highest and best use out of the land that you already own. You don't necessarily have to go and buy other properties in order to increase your profits. You can actually look and see the real estate that you already own, the land that you already own that is not being fully optimized, that is not being fully leveraged. And we talk about getting the highest and best use. I mean, if you've got a big lot that you can build more on, why not? And the opportunity right now with building garden suites is one of the greatest opportunities in the last 20 years in Canadian real estate investing opportunities. Hands down.
Yeah.
Best returns, best cash flow. And so if you want to learn more about that, how to increase your profits, how to increase your cash flow, adding an additional upwards of $1,500 a month in cash flow, come on out on Saturday, July 25th. It's in Edmonton from 2 to 5 p.m. You can get your tickets at reimasters.ca. It's only $20 to attend, which is fantastic. Get to spend the afternoon with myself and Gabby and the team at Edmonton Garden Suites Limited. So that way you can learn how to get the highest and best use of your property and increase your cash flow. Really looking forward to seeing lots of people there.
Yes, me too. Can't wait.
Yeah. Okay. Now, anything else going on in the chat there?
Kyla says, I mentioned the rain and hopefully that they weren't experiencing anything crazy. And she says, we are so far so good. We had a window leak, but it was an easy fix with quick silicone.
Nice.
Awesome. Sorry,
Nice.
I don't have my glasses on. I should have been reading off my phone, not the screen.
No, that's okay. That's okay. So, as I mentioned, lots of things can go wrong in real estate. You know that. And it's important to have backup plans. And so recently, one of our rent-to-own deals did not go as planned. And it wasn't anything catastrophic. It wasn't like a crazy situation. It was just a matter of the fact that the tenant just changed their mind.
Yeah.
And originally, this tenant had reached out to us about our rent-to-own program, and they wanted to transition into home ownership, but they had a few different things that were preventing them from doing that. And that's why we have our rent-to-own program, is specifically for people who are rebuilding or people who are in a transitionary, period in their life. But they don't just want to rent, they want to be able to lock in their price, and they want the pride of home ownership. So rent-to-own programs are fantastic for that, and these applicants were perfect candidates for our program. Absolutely perfect candidates. And we had a property that fit all of their criteria that they were looking for, and they were very excited about the prospect of being able to rent while they saved up their option money and while they saved up and built up their credit and fixed the things they needed to fix. So everything was on track. No issues, no missed payments.
No. Wonderful tenants.
They were doing everything that they were supposed to do. And then, fast forward a few years, and then we got an email. And this is a few years in. I don't remember exactly how long this rent-to-own deal was. A little bit longer than usual, but we tailored it specifically for them. I think it was a 5-year deal, and they were 3 years in or something like that. And we got an email that said, hey, if we wanted to back out, how does that look? And that's just like... You know what I mean?
Well, with rent to own, it's like a very specific plan for a property. It's like, okay, we're going to put the rent to own tenant in. It's going to be this length of a term. So you know exactly when the end date is going to be. And you're going to sell it at this price. So you have a set price. And we are going to make X amount of profit. Like it's very much a calculation. Mm-hmm. Like there's no, what if rents go up and rents go down? And what if we have rent turnover? And these repairs and maintenance and I don't know when we're going to decide to sell it, but somewhere down the road, hopefully it increases, in price. With rent to own, it's very like set. Everything's set. And it's a very like step-by-step plan, and then you sell it, and then you realize that plan that you put in place.
Well, our intention is for the tenant buyer to purchase it.
Yes.
We build it out with the intention of helping the tenant buyer through whatever hurdles and whatever challenges they have that they need to overcome in order to get to a position where they can get their own mortgage and close on the property, right? And when everything is going right, and you're in the last leg, you're turning the corner and you're in the last leg of the race, and then just randomly the tenant buyer just sends an email and says something like, I don't like, it wasn't definitive, but it was just like, hey, so hypothetically, if we were to back out of this, how would this look?
Yeah.
And you're just like, they're not saying they're backing out of it,
But they're thinking about it.
but they're thinking about it. And I'm like, well, like, what's going through my head is like, what the fuck is going through their head right now?
Yeah, what's going on?
You guys do know that your option money is non-refundable. It's very fucking clear. You know what I mean? Like, you must know that, like, you've been putting money into this. You've been doing everything right. It's like, why wouldn't you just see this through?
Mm-hmm.
You know what I mean? But I don't know what's going on in their head. Did something happen? So, you know, the first response for something like this is to get more information. I got to figure out, like, what's going on here. What's going through your head right now, right? And so that's what we did. We responded and, you know, just saying very simply, here's a copy of your signed option contract, which explains everything. What's going on?
Yeah.
And then it was like kind of crickets for a little while.
Yeah.
Which sucks even more because, like, you try and get a little more information, then they don't give you any information.
Yeah. And our intentions are always to help them make the best decision. So if it was just, you know, if it's like, oh, well, I don't know, like, we just don't know if this is, you know, our forever house anymore. Maybe the best decision for them, though, since they already have money into it, is to see it through, purchase it, then maybe go ahead and sell it and then move on. You know what I mean? But without knowing their situation, we can't give them their best advice because we don't want them to make a bad decision that's going to lose them money or put them in a worse situation than when they started, right? So our intentions are always like, okay, well, hey, but like, what's going on? Like, let's talk this through and see what the actual best outcome is here.
And I think us having a better understanding of how all this works and having a better understanding of the numbers of it, you know, like Gabby said, we just want to help and we just want to make sure that they make the best decision for them. But they weren't really giving us all that much. And I can't remember how long. It was like a few weeks went by before we actually kind of got a little bit more information until eventually they reached back out and explained that. I'll summarize it, you know, very long conversation, but they were incredibly grateful for everything that we did. They were incredibly grateful for the program. They were incredibly grateful for us and how we helped them. But ultimately, they made the decision that this wasn't the place that they wanted to live anymore. And circumstances have changed. Now, I don't know if there's anything else more to it, but that's the answer that they gave us, that we don't want to live here anymore. And we don't want to see this through. They didn't give us anything more. And so we explained to them, just kind of reiterated everything and just making sure that they fully understood what all of this meant. But they responded and said that they did. Yes, we totally understand this. Yes, we understand that this is, you know, we're not getting this back. Yes, we understand this. Yes, we understand this. And they politely asked, what's the easiest transition for us in order to terminate the lease and to terminate the option to purchase? And we communicated with them. Everything was very amicable. Everything was very respectful. And we have everything documented, which is really important. One of the things that we teach our students in our mentorship program is to have proper documentation by email. So that way there's a full paper trail of everything. No texts, no phone calls. Everything is through email. And made sure that everything was clearly explained. They agreed clearly. And we determined an end date. But from that point on, it was like, okay, shoot, what are we going to do with this property now? Because we had intentions for this property for them to buy it. You know, selling this property right now might not be the best idea. Now, I'm going to talk a little bit about backup plans a little bit here on why we already had a backup plan for this. But for many real estate investors, receiving a property like that back and vacant might not be the best outcome for them. And if you specifically bought this property because they chose it, you know, does this property that you're taking back, does it make sense to rent it out, or does it make sense to sell it right now? And, you know, had you gotten that property in the middle of December, not a great time to sell your property. Mm-hmm. Had you gotten that property in December in Brampton, and the prices are all down right now, you're in a pretty crappy spot, right? Nobody wants to buy. The prices are down. You could be realizing a serious loss by selling it when you don't want to be selling it, right? And so some people might be forced into renting it out. But if you're forced into renting it out because you don't want to accept a loss because you'd be selling it for significantly less than what you bought it for, then you might be forced into renting it out and renting it out for significantly less than, than what the expenses are. And you might be in a negative cash flowing situation. So you can see how, rent to own is a great solution. It's a great strategy to maximize your profits, to reduce your overall management, increase your cash flow. However, it's not always the best option if you don't have a backup plan. Because with rent to own, and I'm not teaching a rent to own course today, but with rent to own or lease options, it is an option to purchase. It is not an obligation. You are obligated to sell it to them for the price that you've agreed on for that period of time that you've offered that option to purchase. However, they are not obligated to purchase if they don't want to. Mm-hmm. If they decide that they do not want to exercise their right, their option to purchase it, they do not have to. So when you're doing rent to own, it is incredibly important to make sure that you are considerate of that and that you plan for the worst, or you plan for the possibility that they may not want to. And for us, we do. Because I know that if they only have an option to purchase, then that means that there is a chance, there is a possibility that they may not want to, or they may change their mind, or they may default because their circumstances change, because affordability is terrible, because gas prices have gone up 20 to 30% in the last couple of years, because grocery prices have gone up, 400%?
Yeah.
Tomatoes alone, right? So you would be incredibly ignorant to ignore a possibility, and I would say a very probable possibility. So we always make sure that when we're doing rent to own, we always think about, okay, worst case, if these guys don't follow through with this, what's the worst possibilities that could happen? Mm-hmm. They could give it back to us in January. They can give it back to us in June. They can give it back to us in November. They could give it back to us in 2024, 2025, 26. We can't see the future and what the rental market is going to be at that moment. We can't see the future and know what the real estate market is going to be like at that particular moment. But had we got it back in the middle of May and the real estate market was super hot and everything was selling for 10% more than asking price, then yeah, it might be a really good time to sell. But I can't see that. I can't foresee that possibility with my crystal ball. So you kind of have to plan like, okay, well, like if it doesn't work out, what's the backup plan?
What are the options? Right.
So originally what we had thought, since this is such a great rent to own property, it didn't just work for them. It could work for so many other people in that market as well. Then the automatic backup plan is just to list it again, advertise it as a rent-to-own property for somebody else, right? And that makes the most sense. It would just be repeating exactly what we had already done with the previous people. So getting control of the property back, getting possession, cleaning it up, advertising it, marketing it, and putting out our marketing materials to make sure that we could start bringing in qualified applicants to see if somebody else would be willing to take it. Mm-hmm.
The real only consideration with this option is that you are likely to end up, well, it's a possibility that you end up with a little bit longer of a vacancy, because finding a specific rent-to-own tenant who fits your program and the property is a little harder than just finding a tenant who's like, okay, yeah, that'll do.
Well, right? I would slow it down there just a pinch and just be like, finding someone qualified for the program is a needle in a haystack already. Yeah. But then taking it through one more series of screening, which is that finding someone, a needle in a haystack applicant who is qualified for the program. When I say qualified, I mean like qualified on paper, but also who is a good candidate. Like we don't just put anybody through just because they apply, they're approved.
Their situation
has to like they have to be able to. We're going to benefit. We want to make sure that they benefit as well, because if there's better options for them, then we're not going to put them through the program, right? It has to be perfect. And then as soon as they pass that level of screening, now, like Gabby said, that property specifically needs to be perfect for them. Otherwise, we run into another scenario like this again, where they're like, yeah, I liked it at first, but then I changed my mind because I don't like the neighborhood, or we're too far from my mom, or you know what I mean? Mm-hmm. So like, you have to remember that this is going to be their forever home, and that they need to be absolutely in love with this property. Otherwise, they're just going to change their mind in a couple of years, right? Now, I don't want this to. I'm just focusing on the facts and being factual. When a tenant buyer doesn't follow through with a rent to own, the owner, the provider, the rent to own provider, mathematically benefits the most. That's just facts. And I'm not a greedy person. I'm not trying to take advantage of people in this situation. There's a huge stigma around rent to own, because when rent to own deals fail, or when tenant buyers don't follow through or they default, generally speaking, the provider is the one who benefits the most. So a lot of people kind of hate on rent to own because of the fact that, well, you're standing to benefit from all of this. Well, yeah, but there's clearly a contract in place in order to help you succeed, and we've done everything in our power to help you succeed. You didn't do what you were supposed to do, right? So yes, any option payments that you've been making into, paying for the right to buy this property are non-refundable. It's very clear from the beginning. We're not setting people up for failure. So I can't remember where I was going with that. I lost my train of thought. But ultimately, what we're trying to do is we're trying to make sure that people succeed. And this is why I was saying it earlier, that even though they do qualify financially, we want to make sure that it's the right decision for them, that it's win-win for them. Because I don't want to force somebody or manipulate somebody into accepting, our program and this property, and then they change their mind within a few weeks because I'm a really good salesperson. I want to make sure that it's right for them. And so that's what Gabby's saying, is like, for us, we're going to be dealing with a bit of a vacancy. It's going to take a few months. Generally takes about 8 to 10 weeks in our experience, if we have a property and we're trying to find somebody to do rent to own with it. So we have that risk, but ultimately I want to make sure that I'm setting people up for success. And it can be a little challenging, but what ended up happening with this particular deal is that we received possession back in a very, very good market for that particular property.
Rental or real estate?
Sorry?
What kind of market? You said in a really good market, in a really good rental market, or a really good real estate market?
For that property, in that market, both. Both. And so when we received it back, we're like, oh shit, like we could sell this right now. But I understand the real estate trends, the real estate market, and I understand the potential for this property. And I'm thinking to myself, if I sell this right now, I'm going to kick myself later, because I know that the value is going to continue to keep going up. Right? And that could be great for a rent to own, because there's a lot of upside, and we can lock in a lot of that growth into our end price for our tenant buyer. But from the real estate market side, from the asset side, I was like, I really don't want to lock in on a price, because I see some huge growth potential for this property. And so that was that side of it. The rental market side of it, also, this is the type of unit, this is the type of property that is incredibly high in demand right now in that rental market. And there is no shortage of people looking for that type of property. And the rent for when we started that deal compared to the rent today is significantly higher as well. So we could take this out of our rent-to-own portfolio and put it into our rental portfolio and dramatically increase our monthly rent. So we could increase the rent dramatically, and it would be very comparable to what we had locked into the previous deal, the profits. And there's huge potential for appreciation.
Right.
That is like currently ongoing. So we made the decision, and this is how we kind of went, like we were going through all the different options. Hey, we could sell it. Hey, we could rent it for, 6 months, and then we could sell it in the spring. We could do this. We could clean it up and fix it and sell it for a higher profit. It was rent ready, so it was okay. But like we could go and renovate it for $30,000-$40,000 and then sell it for profits, flip it. There was lots of different options that we kind of went through, but we kind of looked at what our current workload was, what was on our plate at that particular time. That and what's going on with the two different markets, the rental market and the real estate market, to determine how do we maximize our profits and the potential for profits. Mm-hmm. And how do we do that with the least amount of risk, right? How do we take that into consideration with all of that? What's the least riskiest path that we could take? Now, I talked about this a little bit earlier, and I'm not sure I touched on this, but when we originally did that deal, there was something that we took into consideration when we first initiated the rent to own with the previous tenant buyer. And that was that we needed to know that in the event that this didn't work out, that this property could work as a rental property.
Yes, very important.
Because if they ever were to hand it back to us and it wasn't a good time to sell, whether that be it wasn't a good time because there was huge potential, or it wasn't a good time because the market was down and we would have been, by selling, we would have realized a loss, or we would have lost our profits that we built in. I want to make sure that we have another option, which would be just to rent it for a period of time until it makes sense to sell. And so whenever we're doing a rent to own deal, whenever we are offering rent to own to a tenant buyer, we need to make sure that at the very least it passes the 5% rule as is. And this really limits the amount of rent to own tenant buyers that we can offer it to in our program.
Yeah.
Because a tenant buyer says, I want to buy this type of house, I want it to be this much, and I want my payments to be this. They might have their criteria, which we try and work with as much as possible. But I want to make sure that I'm not going and purchasing a property for them that is $800,000 that only rents out for $2,400. Because I know that that's not going to pass the 5% rule. So any property that we acquire or offer for our tenant buyers, we need to know that if this ever goes in, if this were a rental property, just as is today with the market rents and with the expenses on this property, it must pass the 5% rule, because that will always be our ultimate backup, right?
Yeah, well, and just to add on to that, and also that there is a pool of tenants who will want to rent it, right? So that it's one thing if the numbers work, hypothetically, this is what it should rent for, but do the tenants, is there an appetite for that type of property? Because it's one thing if the numbers work, but if nobody wants it, if nobody wants to rent it, then you're in no better situation, right? Yeah.
Because ultimately what we want is we want to make money. And I don't want to go and agree to a contract with someone and then they back out of it. And then the possibility of them changing their mind determines whether I make money or don't make money. I'm not interested in that.
Yeah.
I always make money. I am the house and I always win. Okay. I have to make sure that I am always successful. Will not do any deal that has the possibility of me losing money. That's why I'm super cautious about fix and flips and other types of development. If there's a possibility that I could lose and I have no control over that, there's nothing I can do. There's no measures I can put in place. There's no systems I can put in place in order to protect me from that. I just don't do it. right? That's why you don't see me doing certain types of strategies, because I will not do anything that has the possibility of me losing, or worse, losing other people's money.
Mm-hmm.
When I see people out there that say that like real estate or investments aren't guaranteed, I never said it was guaranteed. You invested, so, it didn't work out. You have to be prepared to lose money. I'm not interested in that. That's gambling. I'm an investor, and I only invest for success. So everything that we do must be successful regardless. There has to be some backup plan or 10 backup plans covering every possible what if that could happen to ensure that it succeeds.
Yeah.
And that's what I want for you guys too. And there's so many of you that are thinking that like, real estate investing is risky and like, what if I lose money? What we teach at REI Masters is systems and strategies to ensure that you never lose money. There is always a backup plan. And every little thing that we teach, the 5% rule, the fundamentals that we teach, the markets that we invest in, are all taking that into consideration, that you will never, ever, ever lose money if you listen, if you follow everything that we teach. And some of them seem so dumb and stupid. Even the little one, like we just said earlier, all communication is through email. Sounds kind of silly, but there's a fucking reason for it, right? It is all about reducing the risks to next to like less than 0.0001, right? To make sure that you never lose money. And that's the way that I believe everyone should be investing in real estate. And if you do that, everyone could have such a better life and a better future for your future generations, right? So it has to, with a rent-to-own deal that we do, because I'm basically handing it off to somebody else and hoping that they do what they're supposed to do, or hoping that they do what they say they're going to do. I need to make sure that if they don't, they change their mind or whichever else, which they are entitled to, that I have a backup plan for that. So at the very least, it needs to pass the 5% rule. So when we got this property back, it still did indeed pass the 5% rule. So it was always going to be an option that we could rent it out. I don't know how long we would rent it out. It really depends on the property. Some properties will perform less than other properties, right? Some properties were like, this isn't my ideal rental property. I bought this for rent to own. I wouldn't normally buy this property for like a normal long-term buy and hold. But at the very least, if we did have to take it back, we could.
Yeah.
We could for a short period of time or an extended period of time, so that we have time as our backup to allow us to build equity to get us to or to ride it out, the storm, until a good time to sell for the most amount of profit, right? This property was, this was a bit of a best case scenario. As I mentioned earlier, in most cases, the rent-to-own provider does tend to benefit from this the most when a tenant buyer doesn't do what they're supposed to do. And this was one of those situations. And I'm being clear and transparent about it. When they forfeited their option to purchase, we immediately made tens of thousands of dollars, because all of not the equity that they built, but what the property was worth when they started compared to what the property was worth when they forfeited their right to buy it, it was significantly more. We made tens of thousands of dollars just off of that alone, because of the fact that we had a locked in price with them that we were going to sell it to them for, and they forfeited. So automatically, all of the value increase for that property since they started was now ours, right? Now we're not obligated to sell to them anymore. So we made money off of that immediately. As well, obviously, as I mentioned, this is a property that has huge potential for growth, that will go up in value, and it is going up in value. So we're making money off of that as well. But one of the other great things that happened was that the original rent that we plugged into our calculator when we were determining, does this property pass the 5% rule, when we originally did it, well, the rent had gone up quite significantly because of the demand, the rental demand for this type of property. And because of that, the old rent was $300 less than what the new rent is now. So the rent had gone up by $300 just in a matter of a few years, which is huge.
Yeah. Yeah. When you're talking about just the rent amount alone, that's, I mean, I don't know what that percentage would be, but it's pretty high.
20%.
Yeah.
Rent went up 20%. That's monstrous. Monstrous. Right? So just this increase in the rent turns into $3,600 more every year in a rent that we're collecting, which increases our yearly ROI by 10%.
Yeah.
That increased our yearly ROI on the overall investment by 10%. So it made the most sense to turn this into a rental property, add it to our rental portfolio, and let it do its thing, let it cook, and then we will find the appropriate time for us to be able to liquidate it. But to be completely honest with you, just based on the circumstances and how what the market did during that period of time, I actually do believe that this is going to be a property that we're going to be adding into our portfolio as a long-term buy and hold because of how it all played out. We didn't know that at the time. I understood the strategy, the trends. So I understood that like there was the potential for it. And I had been strategically positioning myself and our portfolio in a way that we could capitalize on that potential opportunity. But because it has been now realized and because I can actually see it and I could see the future potential of it, that's why I'm not going all in on it. But like I've put a lot of my eggs into that basket to make sure that we realize that potential. We realize that opportunity when it does inevitably happen. So by adding that in there, what we've done is we've dramatically increased the profits on that property and the potential for profits on that property. So it ended up actually working out really good for us. And again, I want people to understand that like our intention and what we wanted most was for this family to actually follow through on what their intentions were and that's to call this property home, to make this their home, to see the program through that we set up for success, right? But we can't tell people what to do. We can't force people into doing something they don't want to do. And contractually and legally, they were not obligated to. We tried our absolute best. But even that worst case scenario, because we set it up properly and because we had all these backup plans and because we only accepted the types of properties that benefited us in the event that it didn't work out, right? I would have never accepted a property that didn't work out if they passed on it.
Yeah.
But because I was so calculated and strategic about the types of properties that I would accept for them, that ended up actually being a significantly more profitable outcome than the original outcome.
Yeah.
Right? So that backup plan ended up being more profitable.
Yeah.
Because we were so strategic about it.
Yeah. I think just like investing, any type of investment, any type of real estate investment, there's so many considerations that you need to make on the front end of it to make it successful. There's so many systems, there's so many considerations, there's so many fundamentals that need to be followed. And yes, you can go in willy-nilly and end up succeeding, but just as easily, you can end up failing.
Yeah.
And when you take all these fundamentals and you take all these considerations from the start and you set yourself up right, you're going to end up in these situations where your plans B and C are equally or sometimes better than what your option A was, what your original plan was.
Yeah.
And so it's so important to remember that all these things are in place for you to succeed.
Yeah.
And if you ignore them, your chance at failure just increases so much more. But we can like lay out these beautiful scenarios where it's like, okay, yeah, option A, B, C, D, and E are all pretty good.
Yeah.
Let's go for it.
Yeah, absolutely. Right. So make sure you always got backup plans. Make sure you always play it out in your head. What happens if this? What happens if this? What happens if this? Right? And if you don't have the answer to those things, then you might be in a position where maybe you just you haven't been properly educated, or you haven't been properly taught, or you haven't spent the time to be able to learn these things. And we can help with that. We'll continue to keep helping you every single weekday morning. Just keep tuning in at 7 a.m. Mountain Time to the show. That's what we do. We provide free education and free coaching for real estate investors, so you know these things. You learned a ton today. I hope you wrote it down. I hope you download it in your head and you retain it, right? But if you want to streamline that, if you want to, shorten that learning curve, you can always join our mentorship program as well. We can teach you one-on-one. We can give you the right courses and the right resources in order to make sure that you are properly prepared when you're making these decisions. When you're looking at acquiring a property, what is the potential for this property? What is my worst case scenario? What are my risks? And what other systems and backup plans can I put in place in order to make sure that I'm covered for all of the things that I've never thought of, like flooded basements and historical amounts of rain. You know what I mean? Nobody ever saw that coming. Nobody saw COVID coming. Nobody saw interest rates going from 2% up to 7%, right? We didn't, but we were prepared with the systems that we put in place, and we capitalized, and we actually were profitable, right? Throughout all of this, through all the crazy things that we've dealt with over the years, we're still profitable, and more profitable than any other real estate investing company in Canada. I can't prove that because I don't have other people's portfolios, but I'm pretty sure anybody who challenges me and brings their portfolio to me, I promise you my profits are significantly better than everybody's. I just know because I can see the numbers, and I can't imagine how anybody could beat these numbers, right? And I can say that confidently. And it's not a competition. What I'm trying to do is I'm trying to tell you guys that there is a way to do this right, and that there is a way to succeed in real estate investing without taking ridiculous amounts of risk.
Yes.
Right? And I applaud you guys for continuing to keep joining us live on the show, and for listening to the show afterwards, and for applying these things. And I applaud our students, which I applauded them yesterday, because our students are just doing so incredibly awesome, and they are just doing extraordinary things that most people are not doing, because they're applying these systems and they're applying these teachings. And I'm just so incredibly proud of them, because I'm seeing the successes that we have, they're having the same successes because they're doing it as well. And that makes me so happy. And it makes me so happy as well for even the people that are not in the REI Masters Mentorship Program. I see you guys applying what we teach. I see you guys, making smart decisions and reducing your risks and maximizing your profits. And I'm just so incredibly proud of you. So if you guys need help with this stuff, if you don't understand things, just keep tuning in, keep asking questions for free every weekday morning. And if you want that additional help, you want to take it to the next level, and you want to do it faster and shorten that learning curve, reach out, book a discovery call, and we can talk about the REI Masters Mentorship Program as well to help you get it done faster. All right? Thanks so much for joining us, guys. We will see you guys all on Tuesday, tomorrow morning.
Bye.
Thanks for listening. Want to be coached personally by Wayne and Gabby? Then you should join the Real Estate Investing Masters Mentorship Program. Details are in the show notes to get started.